Guys, these were the four reasons that led to the fake run in the S&P 500 index. And this fake run, it has built a trap in the S&P 500 index. Guys, last week I told you that because there is this the bear candle on 22nd of July, the purpose of forming this the bear candle was to cool down the overheated technicals or the saturated technicals. So the technicals are clearly now cooled down just because of this the bear candle. Okay, but the technicals are still bullish. This means that market is still bullish. This means that the S&P 500 is still bullish. Okay. Now what it means is that we can further expect a bull movement in the S&P 500 index. This means that the market, okay, it was earlier bullish because of this the heavy volatility. It was again expected to be bullish. Okay. However, last week I also advised you that see the technicals are bullish. Okay, market is expected to move up, and we will see 4035, 4065, etc. Okay, so there are good chances that the market may hit these resistances. However, because the Feds are going to disclose the rate hike on 27th of July, this means market will be extremely volatile. Now, after raising the interest rates, also the market was able to sustain at this particular level, Okay. Thereafter, this heavy movement in the market, and particularly these three candles that we are seeing, this is the result, okay, because of the Feds, okay, the comment from the Fed chairman, and he also said that the economic growth, it has slowed down, okay, the businesses output, it has slowed down, everything is slowing down, he has admitted, he has accepted this thing. Other than that, he said that the Feds are committed to bring down the inflation to 2%, and currently the inflation is 9.1%, more than 4 times the accepted inflation rate, that is 2%. Okay, currently it is 9.1%. This means that there is no meeting in the month of August, but in the month of September, Feds are going to raise the interest rates by 100 bps. Now, because the Fed chairman himself has admitted and confessed that the economic growth is slowing down, okay, companies, businesses, the output is coming down, means the revenues of the companies is going to be affected, and when the revenue is affected, so will be the balance sheet and the profit and loss statements. And when the profit and loss statement and the balance sheet it get affected, then it will result in the lower valuation, and when the valuation will be lower, so will be the stock price of the company. And when the multiple companies, okay, they will say that the stock price or the valuation is lower, in that case the index itself, in this case we are talking about SP500 index. So in this case the SP500 index, okay, it will also come down, means the valuation of this the S&P 500 index, it will also decrease. And when the valuation decreases, then the SP 500 index, the price, okay, which is currently the closing price was 4130, it will then come down. So this is how it works, this is how the cycle works. So this means that because the Feds have admitted that there is a slowdown in the economy, we are on the brink of recession, okay, and the data that the Feds follow, that data is again going to get hotter, it is not going to cool down. This means the run that you are seeing in the market, okay, this is what we call as the fake bull run, and this is also what we call as the trap. Now in this S&P 500 technical analysis, I will tell you that what kind of bull trap we are expecting, okay, what will be the levels, and from what particular point, okay, the market will come down, and also where will you get your opportunity to enter into the market, means to short sell or to buy put options, okay, or if it breaches a particular level, then definitely, okay, it will further move up, then also there will be an opportunity for you to buy, okay, and to make some good money. So I am going to do the SP500 technical analysis for the week of August 1st, 2022. So guys, if you are not subscribed to my channel, then you can subscribe my channel and click on the bell notification icon, so that whenever I upload this the SP500 technical analysis on the weekly basis, so you will get the timely notification. And also if you want to get the daily S&P 500 analysis, then you can join my YouTube membership. I have given the link in the description of the video. Now guys, I'm going to do this the S&P 500 technical analysis for the week of August 1st, 2022. And this analysis, as usual, okay, it will be in two parts. First, I will do it on the weekly chart, then I will do it on the daily chart, and this way we will be able to get the most accurate results as we are getting for last many months. And that is the reason why we have achieved an accuracy of more than 80% through the weekly technical analysis of S&P 500 and more than 90% accuracy through the daily SP500 analysis. So guys, I am going to begin with the weekly chart first. So guys, this is the weekly chart. Let me write it down. This is the weekly chart. And first I will do the S&P 500 technical analysis on this the weekly chart. First comes the Bollinger Bands. This is the upper band of the Bollinger Band, and this is the median of the Bollinger Band. Now surprisingly, on the weekly chart, the S&P 500 index has closed just above the median, means the in between the median and upper band of the Bollinger Band. This means that through Bollinger Bands, the S&P 500 is bullish. Earlier it was bearish for last many weeks. Okay, this is the first time it is bullish through the Bollinger Bands on the weekly chart. Now comes the moving averages. If you look into the moving averages, there is a clear fan out in the moving averages supporting the bear trend. However, because the S&P 500 index has closed just above this the moving average, this the green moving average, means it has closed above all of the moving average, it is bullish. This means that through the moving averages, the SP500 index is clearly neutral. Okay, because the pattern is saying that it is still bearish and the closing is saying that it is bullish. Until and unless both the pattern and the closing says that it is bearish or bullish, okay, we cannot say that the SP500 technically it is bullish or bearish. As of now, we will count it as neutral. Then comes the Ichimoku cloud. Now Ichimoku cloud, because the SP500 index is trading below the Ichimoku cloud, this means that the S&P 500 index is bearish through the Ichimoku cloud. Now let's see what other technicals are saying. First comes the MACD. If you look into the MACD, and this is exactly what I told you, that if the S&P 500 index is able to form a doji candle, okay, or a small bull or bear candle, or a heavy bear or a heavy bull candle, then definitely there will be a crossover in the MACD. That is not happening for last many weeks or months. Okay, this is the first time there is a crossover in the MACD, means bearish. Okay, so the directional MACD is now bearish. However, because the MACD is negative and the signal is negative, this means that the S&P 500 index, okay, through the MACD on the weekly chart, it is still bearish. On the broader scale, it is still bearish. Okay, then comes the stochastic RSI. Now for this, the SP500 index, okay, if you look into the stochastic RSI is clearly bullish. It is directionally bullish, okay, and also technically bullish. So if you look into this, the numbers, so K channel is 86 and the D channel is 68. K channel is more than the D channel, and because the K and D are more than 50, this means that the stochastic RSI is clearly bullish. MACD is directionally bullish, stochastic RSI is bullish. Now this is what I've told you again and again repeatedly many times, that whenever you see MACD and the stochastic RSI, they are supporting a particular direction. Technically, in that case, the S&P 500 index, okay, in that case the SP500 index is going to follow that particular direction. However, there is a catch. You cannot say that it will be bullish. So when I will deduce the probable movement of the SP500 for the coming week, then I will tell you about this, the catch. Then comes the divergence. If you look into the divergence in the closing prices of the candles, this is normal, not a problem. Now if you look into the volatility, surprisingly the volatility is again moving up, means the volatility is again almost all-time high in the last 100 years of history of SP500 index. This means that the SP500 index is clearly volatile, it is heavily volatile. Okay, So what we have seen on this, the weekly chart of S&P 500 index, is that the Bollinger Bands, so we have seen that the Bollinger Bands are bullish, Ichimoku is bearish, moving averages are neutral, and the MACD is bullish, stochastic RSI is bullish, divergence is neutral, and the volatility is extremely high. So we have three bullish, one bearish, and one neutral. This means yes, there is some bull momentum in the S&P 500 index, but this is not a strong bull movement. Okay, however you are seeing this candle, but if you look into this candle that you have seen, okay, for the week of 23rd of May, in that case you will see, then you will see that the S&P 500 index in the subsequent week, it moved up and then it formed a bear candle, and then there was very heavy fall in the market, and we need to look for a second candle before we can say anything about the SP500 movement. Now guys, let's move on to the daily chart to see what is expected to happen in the S&P 500 index in the coming week on Monday, Tuesday, Wednesday, Thursday and Friday, etc. So we will deduce the probable movement of the SP500 index on the daily chart, but before that we will do the SP500 technical analysis on the daily chart. So let's move on to the daily chart. Guys, now we are on the daily chart of SP500 index. Okay, so let me write it down. This is the daily chart. So daily chart means one candle represents one day, not 1 week or 1 month. One candle means one day. In case of weekly chart, okay, so those were the weekly candles. Now guys, before I do the SP500 technical analysis, once again, if you have not subscribed to this channel, then you can subscribe the channel and click on the bell notification icons. Now guys, before I do the technical analysis, let me tell you the support and resistance levels. First comes the resistance at, this resistance is at 4291. This is our golden resistance. Okay, golden resistance 4291. For many reasons, this is the golden resistance. And if you want to know about the 4291, then you can watch the videos of last 8 to 9 months. Thereafter, the next resistance is at 4265. Okay, so just look at the right side, 4265. Then we have 4237 or 4235. Then we have 4207. Thereafter, we have an immediate resistance at 4185. So immediate resistance is at 4185. This is the immediate resistance. Okay, and then the next resistance is at 4150. Sorry, 4185 is not the immediate, but before 4185 we have 4150. So 4150 is the immediate resistance. Okay, then comes the next support. Now comes the support for the SP500 index. So the support, immediate support comes at 4110. Then the next support is at 4065. Then comes a very strong support at 4035. 4035. This is going to act as very strong support for SP500 index. Then comes the next support at 3990. Okay, very good support. Then comes the 3938 or 3935. Now this 3938 is going to act as very strong support because it is a support, and also there is a confluence zone that is there in the S&P 500 index, because of which 3938 or 3935 is going to act as very strong support for SP 500 index. Then comes 3884, and then we have support at 3840. This is at 3840. Now the closing of SP500 index was, now the closing of SP500 index in the last week, it was 4130. This means if it comes down to 3840, in that case it has to lose approx 200 points. Okay, means approx 4 to 5%, and yes, that is possible within a week. So the support and resistance level for S&P 500 index are from 3840 to 4291. Now guys, let's do the SP500 technical analysis on the daily chart. Guys, there is one more thing that I want to share with you, that I have a YouTube membership program, and through this YouTube membership program I am giving daily analysis of SP500. Now in order to join my YouTube membership, I have given the link in the description of the video and also in the comment section. So when you click on that link, then this page will open. and this is my YouTube channel page, and then you will see this is the join button. Now once you click on the join button, then this pop-up will open. In this pop-up you will see that there are these two options. This is only one midweek update per week, and this is all midweek updates per week. And also guys, this is the monthly subscription from YouTube. So whatever you are paying here, this is for the full month, for one whole month. Okay, not for a day or for a week. So whenever you want to join, so simply click on the join button. So guys, I have given the link in the description of the video and also in the comment section. Now guys, let's do the SP500 technical analysis on the daily chart. Now first comes the Bollinger Bands. This is the upper band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 index has closed above the upper band and the median of the Bollinger Band, this means that the S&P 500 index is bullish through the Bollinger Bands. Then comes the moving averages. Now there is a clear fan out in the moving averages which was not there in the last week. This clear fan out is supporting the bull trend. Secondly, the SP500 index has closed above all of the moving averages. This means that the SP500 index is bullish through the moving averages. Now comes the Ichimoku cloud. Now if you see that the S&P 500 index has failed the theory of the Ichimoku cloud, and last week I told you the theory of the Ichimoku cloud, the concept of the Ichimoku cloud, that the S&P 500 was supposed to give a reversal as per the concept of the Ichimoku cloud. But because the SP500 index has failed, and that is the reason why I am saying that this is a fake bull run. Whatever you are seeing here, this is a fake bull run because the S&P 500 index has defied the technicals, and no index can ever defy the technicals whatsoever be the reason. Okay, historically this is there, always this is there. So yes, in case of stocks, okay, because stocks are mostly manipulated, so you can expect that the stocks can defy the technicals, but the index, but when we talk about the index, okay, index like the S&P 500 index, Dow Jones, Nasdaq, or other indices like the European markets, okay, the SX5 Euro Stocks 50 index, and the other indices, particularly in case of the indices, the technicals. Now particularly in case of the indices cannot defy the technicals whatsoever be the reason. However, as of now, because the S&P 500 index has closed above the Ichimoku cloud, this means that the S&P 500 index is bullish through the Ichimoku cloud. Okay, now comes some other technical indicators. Now let's talk about the MACD. MACD, it is clearly bullish because the MACD is more than the signal. Secondly, both MACD and signal both are positive. This was not the case last week. Okay, but now both MACD and signal both are positive. And secondly, the MACD is more than the signal. This means that the MACD is bullish. This means that the SP500 index is bullish through MACD. Now comes the stochastic RSI. Now if you look into the stochastic RSI, because the K channel is more than the D channel, this means that the S&P 500 index is bullish through stochastic RSI. However, if you look into the K channel is 100, absolute 100. Okay, and this is what I have told you, and this is what I have told you about this, the concept many times. Now if you see, on 21st of July 2022, the S&P 500 index, particularly see the K channel was 100. Then what happened on 22nd of July, means the next day, immediate day, there was a reversal, and the reversal was because the technicals were overheated, the technicals were saturated. This means whenever the K channel and or the D channel of the stochastic RSI hits 100 or 0, there comes a reversal. Maybe not a long-term reversal, but a short-term reversal, but it will be there at least on the next day, at least on the subsequent day. Okay, so you must not forget that yes, the S&P 500 is bullish, but because the K channel has hit the 100 and on Monday the D is also going to hit the 100, it will make the S&P 500 technicals overheated, saturated, and that overheated or saturated condition will simply bring down the S&P 500 index. Next comes the divergence. If you look into the divergence is normal. As of now, it is normal. Means it is increasing, but it is not still, but it is not yet at the critical level. So divergence in the closing prices of the candles. Then comes the volatility. Now volatility is still like 70 to 80% of the all-time high level. 70 to 80%. Okay. So we are talking about the S&P 500 index and on the daily chart. On the daily chart, volatility on the weekly chart, it was all-time high. On the daily chart, it is 70 to 80% of the all-time high. This means overall the S&P 500 index, this is the SP500 index, is clearly volatile. Not just volatile, but it is still heavily volatile. Now through all of the technical indicators, it is clear that the SP500 index is bullish on the daily chart. Now guys, let's deduce the probable movement of the S&P 500 index through the SP500 technical analysis for the coming week, and let's see what is going to happen on Monday, Tuesday, Wednesday, Thursday and Friday. Now guys, in order to understand the probable movement of the SP500 in the coming week, you need to understand what is happening on the broader scale. Now let me show you the big picture of the S&P 500 index so that you can see yourself what is expected to happen and what has happened. And this is the same thing that I've told you a few times earlier, particularly okay, when this was the case, when this was the case, and when this was the case. I have shown you the S&P 500 index behavior on this the broader scale so that you can better understand what is going to happen, okay, whether the current run it is a fake run or a genuine run, whether this run will be sustained in future or not. Okay, so this is the S&P 500 index on the broader chart. Okay, this is the chart of the S&P 500 index. Now what you will notice in this chart, earlier there was a very heavy bull movement in the S&P 500 index. Then in last year October there was a little correction in the SP 500 index. Then again it's regained its bull movement, then a bit correction, then again, and then it formed its highest ever level, that was approximately 4,818. Now after hitting its all-time high by the end of December 2021, in the first week of 2022 and the second week of 2022, I told you that the 2022 is the year of bubble burst. 2022 is the year of recession. From the first week of January itself, we have seen that the S&P 500, okay, it came down and then finally it breached its previous low levels, and then finally it came down, okay, and it came down heavily. Then there was a reversal, then it came down, then again, and then it moved up, and then again, and this was the movement of the SP 500 index. Now what it means? It means that the S&P 500, okay, or this the SP 500 index is in its natural flow. Now what was not supposed to happen, or what is not supposed to happen, okay, or when to identify the traps, okay, or the unusual movement, there is definitely something that you can relate what is happening in the S&P 500 index, okay, currently in the market, and what has happened in this bull run. If you see back to back bull candles, 1 2 3 4 and 5, then hold, then bull candle, then hold, then bull and bull. Okay, this means that this was a fake bull run, and this was the same thing that I've told you, that this is a fake bull run market and the S&P 500 index will not be able to sustain. And what we have seen, that the market manipulators, they knew what is going to happen in the coming months. The Feds will raise the interest rates, the inflation is moving up, things are not good. So they moved up the market heavily, defying the technicals, okay. And the purpose was to trap the retail traders, Now what's wrong with the retail traders? Okay, there are multiple things that are wrong with the retail traders. Most of the retail traders, they do not know how to trade. Okay, they generally look into the 1 minute chart, 1 minute or 5 minute chart, okay, so, and some even look into the 30 seconds chart. Okay, and that is absolutely wrong. That is something that no one must ever look into this, because there will be very heavy movement, and psychologically, and this is what happens, okay, psychologically, that the retail traders, they are forced to execute their orders, because they are looking into 1 minute, 5 minutes, 15 minutes, or this the 30 seconds, or every second chart. And the other thing is that the retail traders, they do not understand the technicals. Okay, see, I'm not saying that all of the retail traders, but what I'm saying is that 95 to 98% of the retail traders, they do not understand the technicals, and that is the reason again, okay, they fall into the trap. Other than that, there is the fear of missing out. So whenever the retail traders, they see that the market is moving up and up, and there is a very heavy, this the bull candles, or the very heavy bear candle, then they participate in this the trading, and this is exactly the same time they must not participate. Because of the fear of missing out, they participate and they lose money. Okay, other than that, the rat race, okay, the retail traders, they always participate in the rat race. When they see that everyone is buying, they buy. When they see that everyone is selling, then they sell. So guys, this was the SP500 movement on the broader chart, on the broader scale, and you can clearly see what is happening on the broader chart and what is the true direction. What is the true direction of the S&P 500 index? So as of now, this thing is clear that the S&P 500 index, through the technical analysis, it is clearly bullish on the daily chart, and this bull movement is the short-term bull movement. Now let's see what is going to happen in the S&P 500 index, okay, on Monday, Tuesday, Wednesday, Thursday, and Friday. First of all, you need to understand that there is this the bull candle. This is the bull candle that was formed on Friday. That was 29th of July. Okay. The same thing, okay, the same thing we have seen on the weekly chart, that there was another bull candle on the weekly chart. Weekly chart, there was a heavy bull candle. Daily chart, there is a heavy bull candle. This indicates that we are going to see a gap up open in the S&P 500 index on Monday, on 1st of August 2022. Okay, gap up open. Now immediately upon the gap up open, the SP 500 index will try to move up. Now when it moves up, then it will find immediate resistance at 4150. Okay, this is there the resistance 4150, and if it breaches the resistance at 4150, then comes the most important thing in the picture, that is the high of this candle. And this is the 2nd of June 2022, when the market was in consolidation zone. In this the consolidation zone, the S&P 500 has formed a high at 4177.51. Okay, so this is 4177.51. So 4177.51 is going to act as very strong resistance for the S&P 500 index, and the SP 500 index will be forced to give a reversal, either after hitting the 4177.51 or before even hitting the 4177.51. This means that in between the 4177.51 and 4150, you can expect a reversal on Monday. Okay, so now this thing is clear that we are going to see a gap up open in the S&P 500 index on Monday. Immediately upon open, the S&P 500 will move up, and after moving up, it will find resistance between 4150 and 4177.51. In this the resistance zone, it will then come down. Okay, so this thing is clear. Now there is one more thing, that the Dow futures. Okay, if you are a member of my YouTube community, if you have joined my YouTube membership, then you have seen my daily analysis of SP 500. So in my S&P 500 daily analysis, I use the Dow and the Dow futures to predict what is going to happen in the S&P 500 index today. Now the problem with the Dow futures is that the technicals are already overheated, and the technicals are saturated. Now the Dow futures opens at least 12 hours or 15 hours before the S&P 500 or before the American market opens. Okay, this means that because the Dow futures are going to open much before the American markets will open, This means that the Dow futures will try to cool down the technicals. And how it can cool down the technical? It can cool down the technical only by coming down, rather than to moving up, only by coming down. And if it comes down, and the same thing if it happens with the European markets, in that case, this the gap up open we are anticipating. The gap up will not be there. There will be, so there will be either there will be a flat open. So either there will be a flat open or just a bit, gap down open. Now, what will happen if there comes a flat open or a gap down open? Again, irrespective of the open of the S&P 500 index on Monday, on August 1st, 2022, it will try to move up. It will try. So there is very heavy probability. So there is very heavy probability that it will try to move up, and there is very less probability that immediately upon open it will come down. But yes, it can come down immediately upon open, and we can see a very heavy selling. But that is a different case. So I will discuss that particular scenario later. So, but as of now, okay, this is what we are expecting on Monday, on 1st of August 2022 in the S&P 500 index. Now, the other part is that whenever it comes down, it will find support at 4110. Okay, and 4110, it is again a very good support because there is a confluence zone at 4110. Then it will come down to 4065. Again, a very good support for S&P 500 index. Then comes the 4035. Now, within a day, it can expect 2 to 3%. That will be considered normal because this is the fake run, okay, as we are seeing, and this is the trap. So, guys, as of now, we are discussing the first scenario. Now, when it comes down, and if the closing of the S&P 500 is inside the Ichimoku cloud, remember, if the closing of the S&P 500 index on Monday inside the Ichimoku cloud, then it will further trigger selling, and then this the bear leg, it will begin. Now, other than that, okay, you should also remember that because there is no meeting in the month of August, means the Federal Reserve, okay, there is no meeting. This means that the S&P 500 index, okay, and all other indices like Dow Jones, Nasdaq, okay, means the American market, it will remain speculative and it will remain manipulative. Now there comes one more thing. If on Monday, because the market is speculative and it is manipulative, if on Monday, if the S&P 500 index is able to survive, if it is able to close above the boundary of the Ichimoku, in that case, there will be two consecutive closings above the Ichimoku that will then technically support the market, support the index to move up. Now, again, remember, because there was already a consolidation zone in case of SP500 index in the month of June, this means that in order to breach the consolidation zone, SP500 index must push really hard, must be very much manipulative, must be very heavily manipulative, and must be very heavily speculative. Then it can breach this the previous consolidation zone, and then it can think of moving up further. Now, when the SP500 index, it is able to close above this Ichimoku cloud. Now, there is one more thing, okay, particularly in this case, that again it can move into the consolidation. Again, it can enter into the consolidation. So this was the first scenario where we are expecting that the SP500 index, it is going to move up with a gap up and all of these things. Now comes a very important thing, is that if you look into these three candles, 1, 2 and 3, then what do you see? You see three white soldiers. Three white soldiers. Now, what is the meaning of the three white soldiers? The meaning of the three white soldiers is that a reversal is about to come. This is the concept of the three white soldiers. So whenever you see three black crow, so whenever you see three black crows, or whenever you see three white soldiers, so the meaning is same, reversal. Three black crows will be formed when the SP500 is trading bearish. Three white soldiers will be formed when the SP500 is trading bullish. And the meaning of three black crows and the three white soldiers is the reversal. This means it also supports our theory of a reversal that we are anticipating, because the technicals are overheated, technicals are saturated, and on Monday we are expecting a reversal. So this the three white soldiers will give a reversal. The meaning of or the formation of three white soldiers or the three black crows is to bring the market back into its trend. Okay, as of now it is bearish. So in this case, this reversal will try to bring the market back into its bear trend. Other than that, now comes one more thing. This is what we call as the profit booking. Profit booking. So now question is that what is the profit booking? Okay, profit booking means that whosoever has fueled up the market, whosoever has formed this trap, whosoever has fueled this market up, now he will try to book his profits. Now question is that how you can book the profits? Means whosoever has bought, he has not sold, he has bought heavily, and that is the reason why the S&P 500 index has moved up. Now in order to book profits, he has to close his positions. Earlier he has bought, now he has to sell. This is how he will book his profits. This is what we call as the profit booking. Now generally the profit booking, it happens on Monday. Okay, not always, but mostly like around 70% of the cases, the profit booking, it happens on Monday. Okay, other than that it can happen on any other day, but then the chances are like 20 to 30%. Now this profit booking, it again supports our concept that we are going to see a reversal on Monday. Now comes the second scenario, that is the bear scenario. This comes when the S&P 500, SP500 index, it gives a gap down open, and immediately upon gap down open there comes a selling. There comes a selling. So what will happen in that case? The SP500 index, it will try to enter into the Ichimoku cloud. When it enters into the Ichimoku cloud, then again it will give a reversal, or irrespective of the open of the market, the SP500 index, it will move up. Or if there comes a gap down open, and even if the SP500 it comes down immediately upon open, then also it will give a reversal, maybe after 15 minutes, maybe after 1 hour, maybe after 4 hours, but it will give a reversal. So this kind of upward movement or a reversal intraday, it will be there for sure. This means that if you were participating in the bull run, then I advise you strongly to book your profits on Monday. Do not be greedy. Book your profits on Monday. Do not wait for anything. And if you think that you are trapped, then wait for a reversal. The reversal will come. Now it all depends whether on Monday the candle that is going to close, whether the closing of the SP500 index on Monday, it will be inside the cloud or outside the cloud. If it comes outside the cloud, if the SP500 closes outside the cloud, in that case definitely we can expect a consolidation. And if for some reason, again I repeat, if for some reason, if there comes again a very heavy speculation, very heavy manipulation, then again it will be able to breach the previous consolidation zone, and then it will move towards the 200-day moving average, and our resistance of 4185, and thereafter it will move towards 4291. And if on Monday, if it closes inside the cloud, then the technicals will force the SP500 index to respect and to abide by the rules and to calm down. This means that the bull movement or the bear movement, it depends on the closing of the candle on Monday. So bull movement, bear movement, and the consolidation, it all depends on the closing. Now from the coming week onwards, the volatility and the speculation and the manipulation, it will come down a bit. But yes, the S&P 500 index, the Dow Jones, the nasdaq, and all other American indices will still be remain speculative and manipulative until the Feds disclose the interest rates, okay, in the month of September, and this time it will be 100 bps. And as of now, market has not digested. Market will digest the 100 bps by giving you a very heavy reversal in the SP500 index. Guys, once again, if you have not subscribed to this channel, then you can subscribe the channel and click on the bell notification icon. And guys, if you have liked this video, then hit like. And also guys, if you have any suggestions or any recommendation, then please feel free to comment and I will answer your comments. So guys, this was my technical analysis for the SP500 index from August 1st, 2022 to August 5th, 2022.